taking that.
Good afternoon, good morning. Welcome to the online trading webinar. We have had an interesting development this morning, so looking forward to sharing that with you. Hope everyone's doing well. We are obviously wishing the best for Najam, missing him not being around. He's got a medical procedure, so hopefully he'll be back with us right in rain as soon as that's over. All right, let's get stuck in. So ADP jobs number. This week it's all been about jobs out of the US. You know, look on Friday, you got the NFP coming up, right? Very important. Tuesday, we had the JOLTS jobs openings, and that was strong. And that helped yesterday's rally a little bit, 7.391. Good advertisements going out for US jobs, no problem. Today, that's all contradicted. What by? The ADP, the private jobs number. Look, below market's minimum expectations. It's a shock. And it's a surprise, and it means that markets are instantly selling off the E-mini because US labour market is an intense focus. Markets have been expecting the US labour market to start to weaken for some time. It hasn't been happening, and that's been allowing things like the All World Index reported today on Bloomberg hitting
on the geopolitical footing. The Russian Foreign Ministry says they are concerned about rising tensions around Iran and situations slipping into a full-scale confrontation, and there should be only political and diplomatic
hitting all-time high, right?
And Russia is ready to insert for solutions.
You're looking at that can be a concern for markets, but the correlation between ADP and NFP is not strong. In other words, just because you have a weak ADP, you could have a stellar NFP. So all the focus now just really intensifies into the non-farm payrolls. Right. On top of that, you've not only got that narrative going on, but we've got optimism between US and China that they're going to meet, they're going to get some kind of deal done, and that's been supporting the E-mini higher, right? Trump, President Z, if they're going to get a face-to-face meeting, it should be positive. But then Trump's come out overnight saying it's something like Z's a very difficult man to do a deal with. So what kind of deal they'll get remains to be seen. And notice yesterday we got this hammer reversal bar on the daily chart coming out of that resistance, just technically price perspective. Now, technically, we've broken above that area and we've closed above that trend line, so that's positive for upside, but that's still commanding. We need to break above that tail, as I've said there, to really open up some upside. We could still see it today. I could see the market looking through the ADP, particularly if the market is focusing on optimism between the US and China.
A meeting with Trump in the US would breathe new life into bilateral defense ties.
Right. So that's kind of the big narrative that's going on right now. On top of that, we've got ISM data coming up at 3. Now, that prices paid print was very high, one of the highest since basically early 2023 or late 2022, depending on which news source you look at. And we could actually have a look here. You know, there's the prices paid. And if you look here, so that has been the highest reading since, right, February or January 2023 here. You see, prices are rising for services in the US. That's inflationary. That means the Fed has to stay higher for longer. So that's what drew markets' attention the last time with the ISM services print. So keep a careful eye on the prices paid index, right? If we see this going down, so the headline comes into contractionary territory below 50, then you expect stocks to have another leg lower on that. If the prices paid index comes in, you know, as is, you know, around that 60 mark, then you still expect downside in the E-mini because the Fed will have to stay higher for longer, right? So it's inflationary, but negative. So that's what to look for. Employment index as well will be an intense focus. So if we just take a look at the last employment index for the ISM, let's have a look, that'll be in focus. New orders, prices. Let's have a look at the employment index.
On the energy footing and a forecast from Bank of America, it does revise its second half of this year, into forecast down to
contractionary territory, 49. So if that comes in, let's say if that comes in sort of below 46, that'll get markets worried, right? That'll hit those March and June lows from 2024 and March lows from this Yeah, so what we're looking for is, below 60 for the employment index, below 49.8 for the headline, and the prices paid staying above 60, and that should be serious downside for the E-mini. That's what to look for. Okay, but the bank account rate decision as well, but won't be covering that in the futures part here. Right, folks, so that's kind of the mood. So is the mood. It's turned a little bit negative on that weak ADP jobs number. Equity markets are just pulling back from some of the optimism. Volatility is pushing low, so that's positive for equity markets. Bonds are finding a bit of a bid, especially US Treasuries. You can see gold, silver remaining bid, copper remaining bid, WTI Brent crude still experiencing the upflow from the disappointment that there wasn't a greater production increase discussed at the OPEC meeting on Saturday. That's just keeping oil underpinned. And comments from Amina Baker, our very well-known oil correspondent, saying that it wasn't even discussed at the meeting whether there would be a greater than 411,000 barrels per day production increase. Dollar is weaker now on that data coming out from the US weak ADP jobs. It means the Fed's going to be more likely to have to cut interest rates. That dollar weakness, that's been supporting the euro dollar higher. So euro dollar upside makes sense. Dollar yen sharply lower on that as well. All of that makes sense. The thing for us to look at today is really how traders take it to start the session. Now, on the hourly chart, you can see that the inventory is now negative. We're up at this developed value area high here, right, which we are now sort of breaking back underneath this region. So we're in a clear area where it makes sense to see sellers. You're actually seeing a bit of sellers come in now. On the daily sort of chart, the daily volume profiles, you can see we're just bouncing between these clear volume profile levels here. So the two levels for us to look at are marked. So let me just get this. Sorry about this, folks. It's getting a bit messy. You can see we moved that here. Delta turned negative on the ADP. We're pulling up, finding a bit of temporary support there at 5976. And now what we're looking for is maybe a pullback here, see some buyers get trapped and move back down. Okay, that would be legitimate if we saw something like that. That's what I'm keeping my eyes out for. Just want to see something a bit convincing. So either at the VWAP or maybe at that 5987. And maybe keep an eye if you see something here on the 5-minute, if those sellers sort of trap those buyers, something like that. Could be quite interesting. And we're looking at that. We had a nice trade out of the ADP jobs data, just to show you that. So see on the 1-minute chart, right, sharp selling. A bit of buyers against the VWAP. Then look here, those buyers got trapped, and then it was just a sell down to those lows there, and took that pretty much perfectly, really. You can see here, sellers, right? So first of all, buyers were here, right, on the tick chart. I entered short in anticipation of this level breaking. And remember, that came down, I was thinking, okay, is it gonna drop all the way through? So entered anticipation, right? Stops above, the high. Then here, we've got the confirmation. Sellers came in on volume, right? Taking out all those buyers. So 1, 2, 3 lots of buyers cleared out here. That was the catalyst for entering another short, right? So entered another short, and then from there it just dropped, took first off at the first standard deviation, and then just trailed it under the tick chart, and as soon as it moved up, that's it, out. Okay, nice and straightforward. And then tried another little short here, just as those sellers trapped those buyers. But the problem is, because I was in that big support level, as soon as I gave it a little, I wanted to just see it drop and see if it can collapse through here. And then I thought, no, let's just leave it and wait for something better. Okay, so that's where it's at today, folks. So what am I looking for? Well, there's a couple of things I'm looking for. Collapse breakdown through this level, looking to go with the breakout and see if we can have a run back down here to this 5960, right? That would be nice. Otherwise, looking for a retracement back up to these areas and then look for selling opportunities. If I can go back up to this area and you see sellers trapped and we're moving higher and the delta starts pushing higher, I will go long again, right? I'm going to be led by the delta because I can see the ADP being looked through. Because the market says it doesn't correlate with NFP. We're happy about Presidents Trump and Z meeting. One bad data point doesn't change things. I can see the market doing that, or I can see the market saying, "Oh, disaster, ADP, jobs are weakening, it's awful." So I'm just going to let the delta guide me on that. my expectation is for sellers to come back in, right? But I've got that narrative with Z and Trump meeting, and that could trump 1 week from ADP print. All right, folks. Oh, we're just having this ADP data come in. It's a big miss. See, it's coming at 37,000 below the minimum expected of 69,000. So that's a big jobs miss, and we're seeing immediate downside in the E-mini. So I'm just going to pull that over.
The report itself notes that after a strong start to the year, job growth is losing momentum.
Okay, so if you look here, you see here on the tick chart, looking for immediate downside in the E-mini. So just looking, we're up at this sort of big sort of resistance area, and markets have been super focused on the labor market in the US. So if I see these buyers getting trapped on the tick chart, I will take that as a short, just because this should be negative for US stocks. And I just want to see if we get any kind of confirmation of those buyers getting trapped with a nice support level. So, you know, you could see some dip buying, but I think that this will be negative. So keep an eye on this. There we go. We're starting to go through this area. All right, so I'm shorting there. Just got my stops the other side of this level here. I want to see if I can, ideally want to break down through that area. VWAP holding for now.
Impact geopolitical front. Russia's Shoigu meets North Korea's Kim, according to RIA, the news agency.
All right, I want to see if we get underneath this. I want to see these buyers getting trapped here, really. On balance volume pointing lower. Cumulative delta pointing lower. Sellers trying to come in. Need to see them trap these buyers, though. Right, buyers trying to come in here. Let's see. Okay, buyers here and sellers there. So if those sellers get trapped, I'll wait, exit and look for another opportunity. But I definitely want to sell. Hey, Brian, good to see you. Just looking at this ADP miss, it's a big miss. 37,000, well below market's minimum expectations. See immediate downside in the E-mini. I'm just seeing if we can get any of these buyers trapped here. Should be a good opportunity for shorting. I just want to see if I get underneath here. Hey Sergey, good to see you. Just looking at this ADP jobs miss, just giving us a sell bias in the S&P 500. So just looking for that. Okay, if that goes up that way, I'll get out. No, those sellers are still there.
Geopolitical front, the German defense minister says they will kick off a new initiative to find more air defenses for Ukraine.
Okay. There we go. Sellers trying to come in again. Right, so that's confirmed a sell bias and can add another sell in with those sellers on volume trapping those buyers, on balance volume moving lower, cumulative delta moving lower. Just pull the stops up.
So folks, we have around 10 minutes now to the bottom of the hour, and we are due to get some Fed speak via non-voter Bostic and voter Cook. Just note, both have spoken in recent days. Not sure how much we get by way of monetary policy. They will be discussing, will they be moderating a panel at a Fed Listens event. Nevertheless, just worth recapping, this week Bostic was talking about the best monetary policy approach now entails patience, while Fed's Cook was saying that policy was well positioned for a range of scenarios. And she's committed to keeping longer-term inflation expectations in check.
Trying to move down now. Got some more buyers coming in here, see if we can get them trapped, which should be ideal. Got this there's still this slight positive news that Donald Trump meeting with Z, but let's just see. See if we just get another drop down through this area. That would be an obvious target here.
And a Reuters poll suggests Euro forecast Euro to trade at 114 in 3 months, 115 in 6, and 118 in 1 year. And just note, they have been revised a little bit up from the prior forecast of 113, 114, and 116 respectively.
Okay, there we go.
Additionally,
Starting to move now.
Dollar-denominated assets will decline in the coming year versus previous years. That's according to
that's a nice little move lower.
FX analyst surveys by the news.
So I'm just going to take half the position off there and see how it reacts to this region. Just trail it underneath.
Just be aware, US President Trump commenting on the jobs numbers. ADP number out, too late. Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. So US President Trump renewing criticism of Fed Chair Powell in wake of that soft jobs data from the ADP. Repeat, Trump says ADP
right, just trading this stop down.
Powell must now lower the rate. He is unbelievable. Once again, he notes Europe has lowered its rates by on 9 occasions.
It's going down quite. Okay, just trailing it there. Okay, just trailing it underneath that last little move. Okay, close the second position off. Yeah, nice call. Yeah, that sounds like kind of sensing that. You know, yeah, so we're into that value area. So just giving that a rundown. Nice little trade. For those of you who want to see how that works with the tick charts, you see the beauty of the tick charts is that it's more responsive than the 1 minute chart. You can see the actual volume being traded. Yeah, you're welcome, Carl. So you see the trigger was market's been super focused on jobs. Yesterday's jobs were strong, help support recovery. The private jobs market now is coming at 37,000, right? Below the prior of 62,000. Now, the worry for the market is they're expecting the latest tariff news to really start hitting the US labor market. And so far it hasn't. Hence the jobs yesterday, etc., all very nice. But what this has done here is it's alerted the market to saying the US labor market is weakening. Okay, we just got to hold our horses. Don't get carried away with that, because there's 2 things. There's NFP on Friday, and there's Trump potentially meeting with Z. Now he has come out and said, "Oh, Trump's so very difficult to do a deal with," something like that. So a bit of negative sentiments come out from Trump. So it's going to be a jittery market today. And this is going to jitter people. You'll start seeing people talking about financial media doom gloom, right? So watch out for that. And then if you compare this to NFP, right? What you can see is that the ADP here comes to 37. That's updated there. It's not brilliant, the ADP, at showing you what the NFP is going to be. So sometimes ADP can be high, right? NFP can be low, or ADP can be here and the NFP can be there. It's not like here, strong ADP, weak NFP. Strong ADP, relatively weaker NFP. So all this does, it sets the mood. Okay, just sets the mood music. All right, that's the thing to be aware of, and that's the thing to expect. Okay. Nikhil, you put it better than I have. Sorry for mixing my words. ADP generally has a poor correlation with NFP. Exactly. So what it's telling us is not very much, but what it will do, it'll hit the sentiment until Friday. It'll hit the sentiment a little bit today. That's the thing to take from it. So that's what gave us that trade. Now, not a bad day at all. Just the one account that I was down on, and did well on the other accounts. Now, taking a look at the trade of the day, it was really all about news trading today. So we had the weak ADP jobs, a couple of shorts down to support, hit the first standard deviation and out. That was lovely. Then we had the weak ISM data and another short down. Maybe could have made that run a bit longer, but there was the weak ISM data, and then getting in on the pullback here and there and taking off at the standard deviation. So nice couple of trades today, all about the weak data. ADP jobs, US employment, huge focus, markets worried, sell E-mini, ISM in contractionary territory. Plus prices paid high, which means the Fed has to stay high for longer potentially. That's negative for stocks. More tariff worry, we're used to that by now. Employment index, that was the only uptick, 50.7. So if that had been really negative, then that would have really sent the E-mini lower. New orders into contractionary territory. So pretty weak print, 2 weak bits of data out today. Give us 2 opportunities. Okay, folks, that's all for now. Take care and see you tomorrow.